It shows that it's gonna start in a minute, so we can share it now.
Okay, we are live.
Yeah, we are live. I'm showing live.
All right, we're live. We're gonna wait a little while. Welcome to the Go Getter Team Live. For everybody that's out there, we're doing a new series where we want to bring in the professionals so that you understand more about what's going on in the industry right now. There's a lot of news about what's happening in real estate, and we want to make sure you're actually hearing it from the people who are on the ground and in the business. So we're going to wait a few minutes before we start discussing our topics. And we've got a fantastic guest. We've invited Kelly from Atlantic Mortgage. We'll get into that a little bit more. What we're going to do is we're going to wait about 60 seconds and give people a chance to join because we said we would start at 12.
All right. Well, I'm going to take that 60 seconds and turn up my volume.
Okay.
Normally do it here.
Industry right now.
Oh, yeah. It's shared.
Okay. You shared it?
Yep, it's shared on my feed.
Who else is sharing it?
Ansley is also sharing it on her feed, so everybody can watch it.
Sign is sharing it. Is Linnea sharing it?
Yes, everybody's sharing.
Does Linnea even have Facebook?
Is Linnea real?
Gambino does. Gambino does.
So where are we at? We're going to give it 30 more seconds. And then we're going to start talking.
Welcome back, Chris.
Thank you very much.
That looked like a hell of a trip.
It was a hell of a trip.
Yeah.
It was good to be out. I was actually just looking at pictures from the trip because we were posting a few. So it was a lot of fun.
I bet.
It looked fun.
All right, everybody. All right, so let's get started. I'm Chris Williams, and you are with the Go Getter Team. And today we have
Constanza
And Ansley.
And we have from Atlantic Mortgage, we have
Kelly Levins. How's everybody doing?
Levins. Great. So we want to thank you guys for joining us. This, just to repeat about what I said a little bit ago, this is about a new series where we're actually bringing in the professionals from different parts of the real estate industry to speak about what's happening in real estate today. As many of you may see, if you've listened to the news, or you've heard little snippets on your news radio or wherever, come across some social media posts, the market is changing. There's a lot of dynamic things going on in our economy, not only with the war, but also the Federal Reserve has raised interest rates and things have changed dramatically from just 3 months ago. I mean, literally, it is like night and day in terms of at least the environment that we're in. And we want to make sure you're staying informed as to what's really happening. So we've taken a moment to invite Kelly in from Atlantic Mortgage to speak about what's happening from the lender side, from the mortgage side. What are you seeing in the different markets that affect lending? And we're going to be asking a few structured questions. And of course, if you come in and you have additional questions, please feel free to just type in those questions and we'll try to get them answered before we finish. We're going to be here for about 30 minutes. So if any of you come in late, just DM us the questions later and we'll be able to get back to you. Kelly, I've known Kelly for a few years now. He works for a great company at Atlantic Mortgage. And Kelly, I'm just going to let you talk a little bit and talk about your credentials.
Okay. Well, I used to be a realtor. I used to be on the other end of the screen. So I did that for several years. Probably 2006 to 2012. So I see things through a little bit of a different lens. I never really thought that I would find myself on this side of the table and enjoy it as much as I do. I owned a gym for about 10 years and came into the lending industry with one of my best friends. His name is Tony Davis. He owns the company. Tony had been talking to me for quite a while about lending, knows me as a person. I knew his company was growing, and he had reached out to me to, thought that I would be good at it, and reached out to me to come and join the team in origination. And so after enough efforts, I sold the gym and jumped ship completely and into origination a couple years back, and it's been a phenomenal ride. It's been, it was a good time to come in, but it really has been wonderful. So it's fun being on this side.
Yeah. So just to remind everybody, as we go along, visit the Go Getter Team's webpage. Also, you can visit Kelly Levins and definitely subscribe to his content, share his information when he's publishing for anything related to real estate, and definitely visit us for more updates about the industry. I want to jump into a couple questions and things that I think may be important for everyone to know. Obviously, with the environment over the last several years, you mentioned it was a great time to come into lending. You've been doing it for a few years now. Tell me a little bit about what you've seen since you got into the business to what's happening now.
Well, the property values have just been crazy. So thing one, year over year, the value of properties has from 2020, when I came in early 2020 to now, it's in the high teens, 17, 18, 19% year over year. The property values have really gone up. Rates were at historical lows for the last 2 years, and there was a really huge refinance boom. Everybody's taking advantage of rates in the 2s, in the 3s, rightfully so. And, rates have really changed a lot over the course of the past 90 days. So we're seeing yet, another shift in market conditions. And, there are new challenges on the lending side, along the way, what used to, a borrower's buying power a couple of years ago, or, let's say a year ago, might have been $600,000. And now with rates 1.5% or even 2% higher, their income stayed the same. Property values, have continued to rise. So now that $600,000 house that they were looking at, they're more in the 450, 475 range. On approval. So there, you got to be a little bit more creative and ways to get people into properties that that they want to be in. Seeing a lot of borrowers get pre-approved and really have a hard time getting contracts accepted. From the realtor. Properties going above ask, and there's a big fear of overpaying for a property. If that same property, if is listed for 600 and they're having to write a $640,000 offer and waiving contingencies, that's a big leap. So you've got to do that and make sure that they're protected. If that appraisal comes in low or they're they are at risk of losing their earnest money, that's not only the relationship that they have with me, but it's the relationship that they have with their realtor as well. So all those things really need to be considered. But yes, there's lots of changes, especially in 2022 year to date.
So you mentioned like the changes in the interest rates. Are you also seeing any changes in the criterias for the loans that maybe some of the government-backed stuff, they're changing the criteria or adjusting any of that? I've seen that, when markets have changed in the past, we've kind of seen something like that. Have you seen anything like that happening just yet?
Yes, so you're exactly right. That's a good question. So as rates get higher, increase, the new products tend to come onto the market that will allow for a little bit more creative lending. A good example is we just got 2 products that have, that were not available, that were like 2006, 2007 sort of products. So we have interest only, or I'm sorry, we've had interest only. We have 100% financing. So that's a new one that's coming to the table.
Wow.
And bank statement loans. So we recently just did a $1.7 million transaction, just bank statements, no pay stubs, no W-2s, no tax returns. So there's some more unique products coming into the market that offer a little bit more flexibility for borrowers.
Yeah. Are you also seeing like kind of increase in the adjustable rate mortgages as well? I noticed the marketing on that is kind of picking up.
Yeah. So that's on my list of notes to bring up. So that's one. A couple of months ago, I reached out to the person in our office who has, the relationship with each individual investors. We're a brokerage, so we have products from an array of different investors. So we're going to originate the loan and then sell the loan depending on the program right after. So I reached out to our secondary market contact and really made a push for some killer adjustable rate mortgages because sorry, my wife's trying to come in. Because adjustable rate mortgages will offer it'll be fixed for a term, 3, 5, 7 years are the biggest ones, but they'll have a lower interest rate available for that term. And the average homeowner lives in a house for 7 or less years. So they kind of got a bad rap from what happened in 2006, 2007, 2008 with adjustable rate mortgages all having a balloon payment. So if you had a 7-year ARM, at the end of 7 years, you'd have to pay off your loan. And people weren't able to do that. After 2008, getting approved for a loan was really hard. Adjustable rate mortgages are a little bit different now. They adjust, but there are increments on and caps on how they adjust after the fixed period. But yeah, you're able to get in if a borrower qualifies for a rate of 5% now, and let's just say that's what we're seeing in the market, for borrower X, we can offer an adjustable rate mortgage at a 5-year or 7-year, for say 4%, and that is going to make a lot more sense for them, especially if they have a short to intermediate term play in their home and they already know that. They're going to be in Atlanta for 5 years and then they're going to relocate, something like that. Or their kids are about to graduate high school, whatever the situation might be. It allows them to get a lower rate, which allows them to get into the house that they want. And there's also, even if you don't have a plan as concrete as that, and you're kind of, I don't know, I might be in it 10 years, I might be in it 4 years, whatever it is. You can always refinance, at the end of that term. So if you got into that 4% reduced interest rate for 7 years, even if rates are higher, your principal, what you owe in the house is going to be much lower. So, even if you refinance into a 6% interest rate, well, that's 2% higher, but your payment's going to be still lower than it was, even at the 4% interest rate, because your loan balance is $50K less or $100K less or whatever that is. So, or you could refinance into another ARM, once it's all said and done. So, yes, I am. We're doing a lot more ARMs as a company, than we used to, for sure.
And I wanted to backtrack. It's interesting what you mentioned before about the way loans used to be approved back before 2008. Can you just expand on that so people kind of understand why this same crisis is not going to happen? Like, what difference in the financing industry you see that kind of protect them so that they don't have to fear what happened back in 2008?
Well, I was not in origination back then. I was on I was on your side. And I predominantly worked with buyers back then. Listings were few and far between in 2007. Buyers, we had a lot of buyers after 2008 because the values were so low. But, I remember loans just taking, or the process just being very convoluted and taking forever. 45, 60 days to close a deal, or showing up at a closing and not being able to close for whatever reason, because of financing. That was not uncommon. Right now, it's there's so much value placed on speed because the tables have turned. It's really important to be really aggressive with those contingencies, that you mentioned, but you also have to protect the borrower. So just going in at a deal and saying 000, right, for financing, appraisal, and due diligence, there's some inherent risk there. You have to make a very calculated decision on doing that and make sure that the borrower is, from my end, make sure the borrower is very well, aware of, that kind of worst case scenario. And, working lender in conjunction with the realtor, it's important that they understand, the appraisal could come in at this. If it does, we can submit for a reconsideration of value. But I've ran comps and, here's 3, 4, 5, 6, 7 comps. I think you're going to be in good shape, but, I'll prepare them for that worst case scenario. But when it comes to contingencies, you can be really aggressive but still protect them. I put a big effort into doing everything quickly. So closing a loan in 10 days or less. Now, a seller doesn't always want to do that. But if the home's vacant, that's a bonus. Having a loan close in 10, 11, 12 days. Appraisals. I've negotiated with our panel of appraisers to get them back in 5 days or less. So every contract that, an agent who I work with, they know that they can submit it with either a 5-day appraisal contingency or a 5-day due diligence period. If you have the due diligence period, you can waive financing and appraisal, or a 5-day appraisal contingency. So we can do that portion really fast. As far as financing contingency is waived, 0-day financing contingency on pretty much every deal that I do, every approval. I'm not going to issue a pre-approval. I'm not, my relationship is with, to me, right? We're a team, the agents and myself, who we work with. They're not going to get a pre-approval from me if it's marginal or if there are unknowns. A couple of reasons. First off, that potentially jeopardizes the borrower. But even more importantly, it potentially jeopardizes my relationship with the realtor. So if Chris is going out and showing some properties, and that borrower hasn't been, thoroughly approved and vetted, you got to submit a bunch of offers, sometime or nowadays to get them under contract. You got to show a lot of properties. And if you get, finally get a contract accepted on your 15th house that you've shown them, and we get a snag on financing, that's a really, really bad place to be, because that's a lot of wasted time for that agent. And that's not a situation that I'm going to put any agent that I work with in.
The buyer. It's a lot of wasted time for the buyer too, right?
Yeah. And it can all be avoided, which is the thing. So, unfortunately, there's a lot of people who want to buy houses. And there's really no shortage of leads out there. You can get them through, Zillow leads, realtor.com leads, wherever, your pot is. it's real easy to waste time with those leads and just spin your wheels. If they fill out an application, that's one thing, right? That says, all right, they're serious. If they provide all the supporting documents, that's the bigger kind of pull for us is, I need these pay stubs. I need these W-2s. I need your tax returns. I need your profit and loss statement, whatever it is. That's how we know that they are like, okay, they're a serious buyer. And they're ready, they're ready to go. So I'm going to take all of that information and we could do one of two things. I'm going to begin pre-underwriting. So I'll have all that information and I'll make certain that they're going to be approved. Or take it a step further, which on borrowers with a little bit more complexity, I do for all of them. It's called a TBD underwrite, where I will take that, I'll underwrite their loan. I'll submit it to our in-house underwriter, which I'll touch on a little bit more in a minute. So we have an underwriting team. So I'll submit that to them and they'll issue a loan approval. So if you're on the listing side and you've got 3 offers, one with a 10-day due diligence period and contingencies, one all cash, at value, or one with a full loan approval, maybe 5,000 higher, above value. That loan approval is going to stand next to those cash offers because the financing's already been worked out. So, if it were me, and I'm the seller, I'm taking the $5,000 more because it's also a sure thing, just like that all cash offer is, if all the other loan or parameters on the contract are the same. So a TBD underwrite is a huge value add, and the only way you can do that is by having a team of underwriters in house. That's how we can close in 10 days. The fastest I've done is 8, from contract to close, 8 days. And that can only happen if we've got a real fluid system. And we underwrite
the buyer's going to have their stuff together too, right?
Oh yeah. So if I got to have everything, not day one, I got to have everything when you submit the offer. If all parties are kind of working on the same page, and we've got a borrower who's, understands the timelines, and we're trying to close in 8 days to be as aggressive as we can. I've gotten all those documents. I'll do everything I can, and I'm going to make certain that we're closing on time. Part of that is title. Who's the closing attorney on that? Because title also has to come back really quickly. So we have to make sure that, we've got a good partner on that contract that's going to also support those terms. And then all those things working together can make, you as an agent look good and submit some really aggressive offers. That's all really important because that's what it takes now. And, I don't get paid unless y'all get paid. So issuing crappy pre-approval letters or a pre-qual letter is not in anyone's best interest. So it's not really going to happen.
How many, how many accepted contracts do you have for pre-approval? Like, basically, what's the percentage of times that you write a pre-approvals that you actually get a contract because the market's so tight right now?
Not as much as not as high as I would like. Honestly, a lot of that has to do with the, it's twofold. We'll get, and I'm just going to be, brutally honest. I'll get a borrower, submitting all of the documents. I'll have everything pre-approved. I'll have a TBD underwrite. They're in like top shape. But they're unwilling to be as aggressive as they might need to. And, meanwhile, the housing market is continuing to get more and more expensive. Rates are also climbing. So there's a lot of buyers out there, people who I've done pre-approvals for, or another loan officer's done pre-approvals for. There's a lot of people who really, really want to buy a house, but they're waiting. They're waiting for things to calm down, for rates to go back down, or home values to go back down, which there's nothing saying that that's going to happen, but there's a lot of turbulence and speculation in the market. So they're kind of, waiting. So there's a lot of that going on right now. There's also, some people who I work with who, we have a good working relationship and a good level of trust. But there's a hesitancy to, be as aggressive as they can in order to win a deal. So I see kind of the same thing happening over and over and over. I'll tell you, I can get an appraisal back in 5 days, and I get they send me the offer, and it's a 14-day appraisal contingency, and that's just hard to get a deal accepted like that right now. So that's another part. I also have a buyer, whose brother is a realtor, or they're working with somebody who I've never worked with, and it's hard to sell those terms and get an agent comfortable submitting, aggressive, position themselves really aggressively like that. And so, as a result, in this market, it's hard to get some deals accepted.
So basically, what you're also saying is work with someone who knows what they're doing.
Work with somebody who trusts me and our system. And it only takes a couple times and be like, oh wow, okay, that just happened.
So our next question is a little bit more about like the future.
Kelly, where do you see the housing market going? I heard you touch bases on that a little bit. Like, there's a lot of speculation, but nobody really knows. But on the lending side, what is your thoughts on the future of the housing market?
Well, I don't see it going down, for sure. Y'all are out there in the streets. I really feel for agents right now, writing offers. You have to put in a lot of work to get a deal. And the big reason that you have to put in a lot of work to get a deal is the inventory is so short. And as long as there's more demand than there is supply, property values are going to continue to go up. There's going to be more buyers than there are listings. That's going to continue while we're experiencing this shortage of inventory.
What about on the rate? What about on the lending rate side?
I'm sorry?
I said, what about on the lending and rate side? Where do you think it's going? If you just had,
as far as
obviously
rates,
you don't have a crystal ball, but where do you think it's going on the loan side?
They're projected to continue to rise before they normalize. Beyond that, it would just be speculation for me to just say, they're going to be X, Y, or Z. Gary Keller, you know who Gary Keller is? Yeah. He just, he does this thing, where he talks a lot about, that market. And recently he was just like, I don't know what's going to happen next. And as far as interest rates goes, I don't think we're ever going to see the 2s or 3s again. Probably, we might literally never, ever see the 2s and 3s again. And that's what we're comparing interest rates to now, right? People see a 5 or 6 and they're like, oh my gosh, but in 2019, 5 or 6 was great. 2018, 5 or 6 was what you got on interest rate. So slipping into the 4s was something that might only happen on a VA loan or something like that. So we're still in, good territory. They're supposed to continue to rise, but normalize. So I think between that 5 and 6 range is where we're gonna, kind of settle in. Yeah, and that's where we're at. I'm still doing some deals in the high 4s. Tony, the owner of the company, and Naveed, they, for our, we call it a AHM Elite program. So for our well qualified borrowers, basically is at least 5% down and a 740 or plus higher credit score. They trim the margins way down so we could be more aggressive on pricing and rates for those borrowers. Did that because everybody's really, everybody's looking at 2-3 months ago, 4 months ago, as interest rates. So if you were pre-approved 4 months ago and you were talking about an interest rate of 3% and now it's 5%, if I'm not in the market, what am I going to do? I'm going to say, wait a minute, like we were just at 3 and now we're at 5.
Right.
I'm going to go talk to somebody else, right? I'm going to get a second opinion here. And we obviously want to avoid that, right? We put a lot of work and effort into borrower A over the course of the past few months. We want borrower A to find a house, with us. So trim the margins on all those deals because, I'll let Tony and Naveed tell you why. But they're easier. They're a slam dunk, So, they don't make as much as they want to, but the business is good. But I cut you off. I think you had a question.
Yeah, only because we're coming toward the end of our time together. But one quick question that we get a lot because we work with a lot of first-time home buyers as well as others. But student loans are a big deal right now. Can you tell me a little bit about the effect that student loans are having or how they're being counted in the current conditions?
Mm-hmm. Yeah, so there's a couple different ways to slice the student loan deal. You're right. And it's unfortunate because, it's all, going to school is very expensive. And as you get out of school, you've got this massive pile of debt that you immediately have to start paying on. So we can count as low as a half. Right now, everything's in deferment. So all student loans are in deferment unless they're in a payment plan. So we have to count a payment for that, and the lowest we can count is 0.5% of that total loan amount. And that's across the board what you have to do. There's a little bit more work.
So just to break the numbers out real quick. So if someone owes, say for instance, $100,000, you're counting 0.5%, which would be about $500, right?
$500 minimum payment. Yep.
Yeah.
So that negatively impacts DTI, especially.
What's DTI? You got to say it for our audience. What's DTI?
All right. Yeah, I should probably backtrack a little bit. Debt to income ratio. So in most instances, the total monthly obligation that a borrower has would be the debt. So if you have a $25 minimum payment on your Amex, that's $25. $60 HOA, you're at $85. $500 student loan plus a car payment, boom, 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 right? And if you make $5,000 a month, well, we got to be at $2,500 in total debt obligation, including your future purchase or below, in most cases. So student loans play a very large role in a borrower's ability to purchase or not purchase. There's some steps that can be taken, and they're super helpful. And a lot of borrowers don't know about this, or they haven't explored it because their student loans are in deferment. But in that scenario, if you have somebody making $50,000 annually with $100,000 in student loans that are preventing them from getting qualified, they can put that student loan in what's called an income-based repayment plan. And if you're making $50,000 and you have $100,000 student loan debt, that income-based repayment plan is going to, in all likelihood, be $0. So they have to make a $0 payment for 9 years or so. And then their minimum payment might be $170 a month or something like that. Who knows? But it's going to depend on their income. But in that scenario, we won't have to count the $500 because I'll have a letter that says their payment is $0. So it takes a little bit of work on the origination side. It takes a little bit of initiative on the borrower side. But initiative from a borrower just says, I'm doing this. I'm going to buy a house. So that's a good thing, for all of us. But yeah, it's a shame how much school costs. I hate it.
Yeah, but the good thing is that now they know they can do the work on the back end right away with you, so that when they're out and searching, they have all that figured out already.
On the front end. They can do
On the front end too.
Yeah. It's I have 2 people right now who I initially had the initial conversation with last week, and I have not issued a pre-approval because I'm waiting on the income-based repayment letter, which might take 2 or 3 weeks. But as soon as I get that, I send the approval letter because I know that they're good to go, because it might come back and they have a $70 payment instead of $0, but that's data that I want to have so that I can tell you what they're approved for, so you can narrow in that search. So.
Well, it looks like we are over time, and I want to respect everyone's time. We want you to tell everybody how they can contact you if they have more questions. I think, to be honest with you, I think there's a lot that we could have still covered, and we probably do this again, because I can talk about, gig workers, how do they get financed? We could also talk about, the traveling nurses and the EMS people, how do they get. So there's probably a lot more that we can cover. But in the meantime, since this is the end of our live today, tell people how they can get in contact with you.
I will. First off, it's been 37 minutes, and I could talk for at least another 37 more. So I'd be happy to do this again because there is still a lot of things that we can cover. But get in touch with me. The best way is to just call me, shoot me a text. My cell is 404-313-1952. My email address, can we post that on the live stream?
Yes.
Contact information?
Yeah, we'll post it we'll post it in the
comment section.
Yeah, good. I'll I'm new to Facebook Live, so or you can shoot me an email, kelly.levins@atlantichm.com. But yeah, that'll be in the comment section below momentarily.
Perfect.
Yes.
And I'm Chris Willa-Williams. This is Costanza Herrera. And this is
Ansley Dobbs.
And we are the Go Getter team. You could, of course, always click like or subscribe here on Facebook. You can also find us on Instagram at GoGetterTeam_ATL. And, of course, if you want to reach out to us directly, give us a call at 404-994-5100. And we'll, of course, be happy to answer any of your questions and help usher you into whatever your transition is, whether that's to buy a new home or to sell a new home, or if you're looking to invest, which is a whole nother topic we can have with Kelly at a later date.
That's another 37 minutes.
Actually, right. We thank you for watching. If you were able to make it live, we appreciate you for showing up at noon. And if you watch it on replay, just feel free to make a comment and share it with people that you know. And I got one last minute. And I'm supposed to tell you to go to gogetterteam.com/search if you're looking to buy a property and register. And of course, that's the simplest way for us to know that you're looking for a property. And of course, we will link you up with Kelly directly so he can work on your pre-approval and help coach you through the process. Thank you guys for joining us. We look forward to seeing you at our future lives. We're going to do another one next month, and we are deciding who we're going to invite. It could be Inspector, it could be Kelly again, because we didn't cover as much as we could have covered. Could be anything. Stay tuned.
Yeah, go ahead and let us know. Who would you like to be here?
We need to get an appraiser on here.
Oh, that would be a good one too.
Yeah.
If we can find one, because they're very busy these days.
That is true.
Well, I can't talk to them, so you'll have to keep me off of that one. But
yeah.
But yeah, thank you for having me.
Well, we appreciate your comment, and we look forward to seeing you guys in the future live.
Thank you, everybody. Thank you, Kelly.